Mauritian-based boutique bank AfrAsia Bank is readying itself for growth in the SADC and COMESA region, with its sights initially set on Zimbabwe and Malawi. James Benoit is CEO of AfrAsia Bank here in studio. Welcome, really good to have you here.
Thank you.
And it's good to hear and see confirmation of this Africa growth story. And it's a fairly long-standing theme, but not always proof of that.
Well, for us, we set up 5 years ago, and the name is the strategy, AfrAsia, Africa, Asia. So we've had our operations now in South Africa for almost 3 years. Zimbabwe is our first big foray into the region, and so yes, the returns and the risk we think are quite an attractive combination right now.
Just to ask you, what is the role of the Asia? Is that the source of the funding, or is it also about business flow between the two?
Business flow. There's a lot of trade finance, a lot of investment from Asia. A lot of Africa's materials is used by China and other Asian countries. So AfrAsia is trade and investment between the two continents.
So now you're stepping in, you already have your presence in South Africa and in Mauritius, obviously. So how gradual will the expansion be? Presumably you're still learning.
Yep. We're looking at other regions in other countries in the region. Tanzania, Kenya could be on the cards. We'd be looking to maybe do a listing here in sometime in the next 12 or 18 months. So it is getting ourselves ready, step by step, and looking at different opportunities in the region. But we're not an investor. We're not a fund manager. We're an operating bank, so we take positions in banks where we can add that transactional investment advisory capability.
James, the idea that you are considering a listing means that as a bank you're continuously looking for capital.
That's right. Banks are by nature capital intensive. Every time we lend out money, we always need to have capital to back that. If we make an investment in another bank, we have to have capital for that. So yes, it's an ongoing process to support our clients as they expand in the region, and us as we expand in the region.
So you're tentatively moving onto the continent, and as you reach out for capital funding, what's the sort of risk appetite of your funders then? Do they understand frontier markets and what it entails?
Most of our private equity firms or our parent company are in this region, or they're active in this region, so they understand that. They want us to be active in the region. So yes, they're looking for us to be able to add value by finding the right banks where we can leverage operating strategies. So yes, they have a very healthy appetite for Africa, and we see that increasing every day.
James, you've just bought just over a 1/3 stake in Kingdom Financial Holdings with presence in Zimbabwe and Malawi, I believe. Now, when hears Zimbabwe, one wouldn't necessarily want an exposure there. So again, you're thinking very long term, you're thinking potential.
I don't think this is long term as most think. The dollarization makes we're really in a transition era already with the power sharing agreement and the dollarization. So to me, Zimbabwe doesn't look, it looks very, very good for the upside from here. I think the worst is behind it.
For you, what would the risks be in the future, over the next 5 years or so?
I think the risks are that China slows down a lot, because that's obviously a key source of demand for what Africa has. And obviously the ongoing global crisis continues to potentially make demand worldwide subdued, which would hurt. But otherwise, I think the growth and the base from which Africa is coming, it gives it still so much upside that I don't think there's a huge amount of risk for Africa per se.
What's the momentum that you're seeing? Is it across the board in terms of mining and all the related infrastructure that it needs, and the financing that you'd be offering the consumer, education, health, etc.?
It's all of those: mining, telecoms, as well banking, because now that Africa is becoming a middle income kind of consumer driven economy, that obviously brings financial services into play. So it's all those and more, and we think that will continue.
And there's been a lot of debate in South Africa really about South Africa's role as the springboard onto the hinterland, and many dismiss that and feel that it might be too difficult to work through South Africa, rather establish yourself directly. You yourselves have 3 offices here in South Africa, so how do you perceive that argument?
For us, Mauritius and South Africa are joint kind of springboards or engines for the growth. So there's great human capital here in South Africa, and with Mauritius having its reputation as an international kind of financial gateway, we put them both together, and that gives us an incredible amount of capital and people to do things in the region. So yeah, we think South Africa is indispensable for the growth of Africa.
And then Basel III, the regulatory aspects, so you're raising your eyebrows. So what does that mean for someone like you? Yes, it's got the overarching implications, but then there's also the country-by-country applications.
Well, we're already Basel II compliant in Mauritius. We're moving on to Basel III. Banks are very well capitalized there. Our regulator already has a restriction of it, that we have to have 10% minimum capital adequacy, which is already far higher than Basel. So it's not really an issue for us at this stage, and we're ready to align to it as it comes in play for Basel III.
And then, James, your perspective from Mauritius, some argue that the Mauritian Stock Exchange and the entire financial service there could give South Africa a run for its money. Some listings considering Mauritius. How do you see that?
I think they're complementary because there's certain things Mauritius has in terms of COMESA, SADC membership, free trade agreements, which make it somewhat unique, and also the India angle. But South Africa clearly has much bigger companies listed here, bigger market cap, bigger liquidity. So I think they have to work together. Mauritius can't replace, I don't think, the JSE overnight, that's for sure.
And then turning to the issue of private equity, because I know that some of your finance partners are in that space. What's your feeling of the potential? That's, I'm sure, similar questions that you're asking, the potential for private equity and deep and even longer term investment on Africa?
Most private equity is coming now, and they're coming in at smaller fund sizes, a few $100 million, because it's hard to mobilize more than that in a reasonable period of time. But as we start to see the transactions get bigger and consolidation happen, you'll start to see the much bigger firms put in place much bigger fund structures. We see that because they often use Mauritius as the domicile for those funds into India or Africa. So every week I have major private equity firms in our offices. So I definitely can say the trend is strong, it's continuing, and the sizes are getting bigger, and the serious investors are coming in much higher quantum than we've seen in the past few years.
Going back to the listing, if you were to consider a listing, how would it be? A dual listing, Mauritian, South African listing?
Probably we would. Mauritius is our home market, so I think we would want to be listed there because of all the benefits we would get for being listed in our home market. But again, we think South Africa is still such a big mobilizer of capital and the best capital markets on the continent. Yeah, we would consider a dual listing.
And how long in advance does one have to start that process of listing on the JSE?
Well, we're new, we're somewhat unknown, so we're starting it already, and hopefully maybe in a year and a half we'd be able to list. We're pretty, banks are regulated very heavily, so we're able to comply with all the information requests. So it's more a matter of positioning what we do, our perception, our reputation with an investor base. But I would say a year is probably enough lead time.
James, thank you very much for coming in. It's good meeting you, and we wish you success.
Thank you.
That's James Benoit, CEO of AfrAsia Bank.